Let's now address Torrent Pharma. It's been a good quarter actually for them. What's been driving the India business growth? What's the way forward? Let's try and understand all of that. We have Sudhir Menon, the CFO at Torrent Pharma, joining in on the show right now. Sudhir, hi, morning. Great to have you on the show this morning. Tell me what's happening with your India business, because it seems like that's actually, growing a double digit. What's been working for you?
Yeah, good morning, and thank you for having me on the show. Very briefly, what we've done in quarter one, the India business underlying growth is 16%, adjusted for 1% impact on account of the NLEM price implementation, which is kind of getting neutralized, I would say, in quarter two. The base business, ex of Curation, growth is 10%, and as per the secondary market data, the market has grown at 4%, and we've grown at around 9%. So I think as far as the outlook for the full year is concerned, our objective is to grow in double digit. However, it will importantly depend on how the market is going to grow. We believe the balanced quarter growth should be much better than what we are seeing in quarter one, and we should be able to outperform the market growth. Additionally, there are a few growth levers which should further help us in achieving our growth objectives, which is the field force expansion, which we've carried out over the last 2 years. We should see productivity improvements panning out from here. Curatio portfolio, which is the acquired portfolio, the growth momentum should continue, and we believe there is still good amount of runway for the portfolio to grow further. We are also seeing some positive outcomes on the consumer health segment, which we launched in H2 of last year. And with more products which would be getting added during the year, there should be a gradual scale up happening as far as this segment is concerned. So I think overall, it is likely we should be able to achieve a double-digit growth for India business for this year.
You did, mention Curatio. I want to understand whether you are as confident about your US business as well as you are about the India segment. Because if I recall correctly, you had the aspiration to reach about $50 to $60 million quarterly run rate over the next 3 to 4 years. On target?
I think it's too early to talk about that, right? I mean, we are awaiting the USFDA response on the Dahej facility, which probably should come in September. And I think if everything goes well, then we should see the new products coming through for the US market in maybe 6 months' time. And if that's something which is happening over the next 2 to 3 years, is what we are trying to target, 50 to 60 million a quarter.
To some of your peers, they are telling me the following, that formulation prices have stabilized, API prices are still suffering because of excess capacity. What is your understanding of what within pharma still has the issue of pricing as well as overcapacity, and where the trend and the tide has turned?
So I think as far as we are concerned, even I think during the COVID time when the raw material prices shot up, we weren't much impacted, I would say, in a material way. With the commodity prices coming down, we are seeing some improvement in raw material prices happening, but not too material to really talk about that, I would say.
What is the outlook then when it comes to your growth from the rest of the world as well? For instance, you had the Brazil growth that slowed down a little bit. Germany has been fairly strong this time around. Can you just walk us through the other geographies and what you've experienced?
Yeah, absolutely. So I think our international branded business continues to deliver double-digit underlying growth, and we believe they should sustain for the full year as well. Brazil, which is the second largest branded market, the underlying growth for quarter one has been around 17%. There has been a spillover of sales from quarter one to quarter two because of delayed dispatches to one of our largest customers in Brazil. And as for the secondary market data, we are growing at 15% in Brazil. Additionally, we would be launching 5 more products in the balance year, and a couple of them reasonable sized markets, which should help us to get incremental growth. In Brazil as well, we've expanded the field force over the last 18 months, and we're already seeing positive signs in terms of productivity improvement and the market share improvement happening in the expanded regions. We have a small piece of generic segment in Brazil, which constitutes 10% of the overall revenue base in Brazil. And that has been scaling up very fast for us. So I think on an overall basis, Brazil should deliver double-digit growth this year. On the generic side, Germany has come back on growth with incremental tender wins happening in quarter three and quarter four of last year. And there are incremental tender wins which we are seeing in quarter one as well, which should start somewhere towards the end of quarter three this year. And therefore, Germany growth visibility looks good for the year because these contracts are typically for 2 years, I would say. And on the US, I would say versus quarter four of last year, there's no negative surprises in terms of the price erosion. And we've been able to maintain the run rate we should be able to maintain the run rate at 35 million a quarter, with probably the product mix slightly changing positive as far as our US business is concerned.
The gross margins have improved quite smartly, and that's really been led by a better product mix and the softening of API prices. What is the outlook down the line as to how you see the gross margins shape up, as well as your EBITDA margins? Do you think that you can, grow them from the current 30.5%?
I think what we've delivered in quarter one in terms of gross margin is looking quite sustainable for the full year. And that's because of, as you said, the branded mix changing favorable, including some of the product mix changing favorable for us. And also the generic markets contributing in a positive way because of certain product mix changes which we are seeing in the generic market. As far as operating EBITDA is concerned, we've delivered 30.5% in quarter one, and I think that's something which should sustain for the full year as well.
Sure. Sudhir, one final question, and I really want to understand, although you did allude to it earlier. Tell me about the timelines on when you see actually resolutions on the compliance issues at Dahej as well as your Indraj facilities.
So I think Indrad is 2 years from now, I would say, because the re-inspection happened recently and we got OAI. It could happen earlier, but I think conservatively it should happen in 2 years from now. Dahej, we are expecting the response from USFDA in September of this year. We hope to get a positive response on Dahej.
All right, appreciate your time. Thank you for joining in and giving us a view on how business is shaping up at Torrent Pharma.